Recording. Okay, welcome everyone to our daily market analysis call to prepare for April 26, 2017. Just a quick disclaimer before we get started. This is for educational purposes only, and trading is a risky business, so please be careful with your money, especially right now with a lot of uncertainty in the market. So I highly recommend keeping your trade positions small. And going into the French elections here, things are going to be a little bit risky. So keep that in mind. If you have questions about your individual investment needs, I recommend you talk to your investment advisor. Let's move on to let's start off with our Forex factory, first of all. Looking at the economic calendar, in terms of the news here, the important news that came out today was the consumer confidence number. It was below expectations, and it looks like it's been falling. Actually, let me just close out my feed here. News feed, 1 second. Okay. All right, so going back to our economic calendar here, the consumer confidence number came out negative, and it has been declining over the last few months here. So that's not a good sign. And our new home sales number, though, came out really positive, and it has gone up since the previous number was released. So that's positive here. And overall, in terms of what's going on in the markets from fundamentals perspective, we had positive results out of the Eurozone in terms of the French elections. Macron got the highest number of votes as a result. That looks very positive, and it's positive for the euro. Another thing that's going on right now, the reason why euro is going up like that is also because ECB has started mentioning their monetary policy stance. So before, they were all talking about, it was all about expansions, adding on to monetary policy. So they've had a very expansionary monetary policy. So this is going back to when the US first started talking about increasing interest rates. So ECB is not talking about raising interest rates at this point, but they are talking about cutting down asset purchases, which is another way of tightening the monetary policy. And as a result, that is giving boost to the euro as well. So as they start cutting back their asset purchase program, it will be positive for the euro. So over the next coming months, once the French elections are out of the way, as ECB starts talking more about the asset purchase programs or cutting down of it, we will see positive impact on the euro as well. So over the last little while, various different speakers have come out and they've started dropping hints about the monetary policy. And again, today we heard on the newswire, there were some more comments around that. This shows, this is kind of like what the US was doing prior to them raising interest rates. They had started talking about it even just recently before they did the last interest rate hike. They started talking about it. When they start talking about it, it's one of those buy the rumor, sell the news. So when they start talking about it, especially when you see more than one person come out and start mentioning it, this is a positive sign. So overall, over the next little while, we may start seeing a more positiveness in the euro. So keep that in mind. Into Wednesday here, not much in terms of the London session, but for the US session, we have core retail sales out of Canada. Canada has been getting hit hard. So we saw President Trump first blasted Canada over dairy disputes, and then they have put in a 20% tariff on Canadian lumber. As a result, that's negative for the Canadian dollar and positive for dollar CAD, because it's bad for the economy, for Canadian economy. It's just bad for their exports. So overall, that's bad, negative for Canadian dollar, as well as the oil has been dropping, which is also negative for Canadian dollar. So there is that. There's also, from monetary policy perspective, there is disparity between U.S. monetary policy, which at this point is contracting, whereas in terms of Canada, it's not expansionary, but it is neutral. So Bank of Canada in the last statement said that they were very neutral on the interest rate. They were not looking to hike interest rate anytime soon. And as a result, there's divergence in the monetary policy between the two countries. What that means is that Canadian dollar not looking so good at the moment. So keep that in mind. If we start to see more negative numbers out of Canada, we could see Canadian dollar dollar CAD go even higher. So keep that in mind. And then we also have crude oil inventories coming out tomorrow at 10:30. And in the evening, we have Reserve Bank of Australia, Governor Lau speaking, and monetary policy out of Japan. Monetary policy, we're not expecting it to be positive for yen, just because they don't really Bank of Japan doesn't want yen to strengthen, especially with a lot of risk being in the market. Yen tends to strengthen as it is, so they don't want it to go any higher. So we've been seeing pullbacks in yen. Everything against the yen has been going up. And a part of the reason behind that is because of the risk in the market after the French elections. The risk has come down. As a result, yen is going in the opposite direction, so is gold. Gold is dropping because of the reduced risk in the market. We don't have the North Korea has kind of gone back. We're not hearing a lot of comments around that. Then the French elections, the risk has been reduced. So as a result of that, we are seeing these risk-related assets kind of decrease in price. So we're not expecting them to say, Bank of Japan, to be really positive about yen, actually, about their monetary policy. We don't expect it to contract. One thing I forgot to mention here, today we have CPI numbers, which is the inflation numbers coming out for Australian dollar, and these numbers will be important. So they come out in about an hour, and as a result of these numbers, we should see a direct impact on Australian dollar as well. So let's go take a look at the charts. Okay, we'll start with New Zealand US dollar. A big down day for a New Zealand dollar. Yesterday we had talked about how, based on this candle, we were expecting a drop, and our first target was 69.80, but that has it has dropped further than that. Now we have a very bearish candle. So at this point, I would be looking for another bearish day on this. However, the inflation numbers out of Australia could have an impact on this. So keep that in mind in case things kind of start moving. Sometimes these two pairs will align. However, Aussie New Zealand would likely be the one that will move as a result of the CPI numbers because of the disparity between the two. So in this case, right now, New Zealand is more bearish compared to Australian dollar. And based on this candle, we're looking for another drop. However, because it is a big candle, we could see a pullback. In terms of the pullback, the first one I would be looking for would be the 69.80 level. That would be one level for a potential level for a pullback, and 69.70-ish level. This here would be the another level we could watch out for. So 69.70 level approximately around here. See this important support and resistance area. There's a pin right here. So maybe we could just get a pullback up to there and then a drop. But overall, I'm bearish on this. If you take a look at the 1 hour candle, we did see double top here, and as you can see, price has been making lower highs and then nice drop. This is what we were looking for yesterday, and we talked about how we could see another drop here, and that's what we saw. Price did stabilize a little bit here because this was previous support and resistance area, and then it dropped further. Now we are looking at 69.20 target, so we could see a pullback into 69.70, which is very close to our pivot point for today. So looking for price to pull back, but another good level for a potential pullback is the 69.80-ish level around here, which was the support and resistance area where price had trouble on the way down. So we could see a pullback into this area and then a drop to the downside. But overall, I'm looking for a move to the downside into 69.20. 69.20 area is a strong area. If price drops further, then the second target would be this 69.90, 68.80-ish area would be the second target to the downside. So overall though, looking for a move to the downside. Aussie dollar here, we have to be open in this case. Based on the daily close though, this looks bearish, and we will look for another move to the downside. But the CPI, inflation numbers, red news, it could change things. So keep that in mind. In terms of the pullback, we could see the price pull back into this level right here, this pin right here. So we have here support and resistance all the way to the left. So that's a good level, 75.50-ish level. And then another drop. The target is 74.70 area, so approximately this area. And it could come into trouble here, 74.89-ish. But this will be the target to the downside. So let's take a look at pullback level here. So here we are. This is a good level, right where the price dropped from. 75.59-ish area. So we could see a pullback into here, and then we see, we could see a pullback into here and then a drop, or if we get a pullback slightly lower into this area. So this is a good area as well. I do prefer this one though for a potential pullback. So pullback here and then move to the downside. So this type of move, looking for first target will be this right into here, so 7,500 level, and then a break and a move to the downside. That's kind of what I'm expecting. This is 74.70 as the target and 7,500 as first target. Although having said that, there is inflation number coming out. Again, like I mentioned, it is red news, so it could change. Or it could change things. Okay, so in terms of dollar CAD, this has been very, very bullish. The first sign of bullishness was, of course, this railroad reversal, and then we've got this bullish pin bar. And since then, it's just been a one-way street here. Now we got into this big number here, 3,600, which is very, very important support and resistance area, had a stop run, and now price has pulled back. At this point, this the pin here gives it a little bit of a neutral bias, which means when we are into such a big, important support and resistance area, we normally see stop runs at those levels, and we also see orders on the other side of it. So usually sellers will tend to step in. So if we go out a bit, so this is where we are. See how important this level is? Twice it got tested back in 2016 here. From here on, now we are, once it passes this, so generally what happens is it will pull back and then make another push through the highs and go to the next level. So the first level here would be this one, which is 3650, and beyond that we are looking into higher levels right there, 3800. So those are the levels to the upside. Do not expect it to go to 3,800 just yet, but the move that I would anticipate would look something like this. So I would be looking for a move pullback and a move into the highs once again, and then a further move to the upside. So this one at this moment does look bullish, but this big pin bar here, or the big wick to the upside, means that it could pull back a little bit before moving up. And from fundamentals perspective, like I mentioned, there is a divergence between fundamentals for Canada and the US, especially if we see some tax cuts coming out. So in terms of the 1 hour chart here, this is where we are. And now I'd be looking for a move to the upside. So a good level for a potential long would be this level here, 35.20. So we could see a move like this and then a bounce off of that. We could also see a move come into this 3,500 level, which is our S1 level. So we could see something like this and then a move up and further move to the upside. So basically I'm looking for a pullback and then another run for the highs. So that is, that's kind of what I'm looking for. So if we go back to a 4 hour chart, let's see how much it has moved here. Okay, so this is just below 23%. So that's very reasonable pullback. Even then, you know, anything that's less than 23% or around 23% is quite bullish. So at this point, even if it comes into this level, it's a normal pullback for further move to the upside, considering how much we have already moved. But we have moved 1 level pullback, 2, then 3 levels already. So we are kind of due for a bit of a pullback. So 35.20 looks good, and then 3,500 into this level here. This is a good level as well. So I would keep both of these in mind. This right here, this is where the price, see how, so the moves that we normally draw, see how price goes up, pulls back, moves up, pulls back, moves up, and now we're seeing a bigger pullback. So keep that in mind. So these things tend to happen. Very nice bullish pin bar here right into this level here, and then a move to the upside. So that's what I would mark down for dollar CAD. Overall, looking bullish. Pound dollar here. Pound, I was looking for a potential move to the downside here in pound. That did not happen. Especially with the positivity in the euro, it is, these two pairs are looking quite bullish now. It hasn't broken. We're looking for it to break 127.70 level. It did not manage to break that level. And generally now when that happens, it usually means another move to the upside. So we could see another move up, basically a test of the high and then one of these moves. So that's looking very much like a little flag here, which means next move could be to the upside. So this 27.70 is a very key level. Since it did not get broken down and it's holding the highs here, looks very bullish at the moment. So going down to our 1 hour chart. So this was the level where price was pushing into yesterday, and I was looking for a break of this level. Did not happen. And I was looking for price too, because it was making lower highs to come down again, and that looks, it's holding the highs unfortunately now. So looks bullish. Next move, we are looking for first target of this 2,900 level, right into the highs here. And similar to dollar CAD here, we could see a test of the highs, a bit of a pullback, and then a break above the high. So the move could look something like this. So we see move into the highs, a bit of a pullback, then a break, and one of these moves. So that's that could happen. So I would keep that in mind. But the first target would be 12900. Even in the Asian session, generally what happens is in the afternoons, we see a lot of these things that look very bullish. They tend to pull back before they make another move to the upside. but not in this case. So this is holding the highs right now, which makes it bullish. Euro dollar here, this is what we looked at yesterday, and now we have a very bullish close, and already we are pushing into the highs. The next target is 110 here. We haven't seen this level in a while, but as we know, when politics are involved, these things, the market sentiment really drives the market. I was looking for a gap to get filled. That is not the case. Still a lot of bullishness in the euro. As we can see here, after this, I was looking for a red candle, but we are still a lot of green volume here, which means makes it bullish as well. So at this point, first target 109.50, which is the high, this one here, and next one will be 110 to the upside. In terms of here, so as we can see, this is what we have been drawing all this time. Price tends to go test the highs, break through, pull back, another move to the upside. This is what we are seeing currently. So next target here, once it breaks through this level, 109.50, again, we would be looking for some of the same move here, breakthrough, pull back, another move to the upside. This is also R2 level, 110, so very doable. And now there's not much news coming out of the Eurozone either, so this is very doable tomorrow. So looking very bullish. There is this gap at some point. Excuse me, we'd be looking for this to get filled. It doesn't look like it's right now. A lot of other pairs that had gaps at the open have filled, but not for euro. Euro still has a lot of bullish sentiment. And so this is kind of like British pound here as well. See this big drop that we had and then a pullback, and then now price is coming back and that whole thing has been filled. So we are back into where we started prior to the big drop. And that's the kind of the case at this point here as well. We are, we may not get this, especially if it takes off now, we may not get to have this gap filled for a while. So we may have to wait a while, but for now, this looks bullish. All right, any questions? Anything else we want to look at besides the majors here? Okay, if not, pound yen, let's take a look. Pound yen, there is big disparity between the two. I have not looked at the chart, but should be bullish. Yes, it is bullish because yen is weak at the moment and pound is very, very strong. Yeah, that's what I would expect. I would have expected. So this is, see, this is what we were seeing with the pound here as well. Big move up, price holds the high and another move to the upside. So at this point, this looks bullish. In terms of targets, we could be looking at 144 here, 144.00 as the next potential target. There may be something over here, 143.50 would be the first target, and then we're looking at 144. So 143.50 and then 144 as the second target. So looking at, so see how this gap did get filled here. Price gapped up, came down, filled the gap, and then took off from there. Did not happen in the case of the euro dollar, which means it has a lot of positive sentiment driving the price higher. So at this point, this looks quite bullish. And we could see it pull back. See, the pullback wasn't much at all. And it's looking bullish at the moment. So I would be looking into those next two levels, 143.50 and 144. And dollar yen. So let's take a look at dollar yen. Dollar yen, again, very bullish. See, this is the level we were we had talked about previously, and price came and did this sort of bottoming pattern here. Once you see this type of compressed move and then a rounded bottom and then a move to the upside, it gapped up, and now we have a very bullish close here. So let's take a look at levels here. 112.24 is a good level, and before that, this is a good level. See this, all this resistance here, which is 111.60 level. So between 50 and 60. So looking at from a 1 hour perspective, we did see price gap up, went back and tested the level. This is what we are seeing in very similar move we are seeing in euro as well, except in this case price did pull back, a little bit of the gap left, but we are seeing this type of a move moving to the upside. So 111.60 and then 112.24. At the moment it looks quite bullish because yen is weaker, because the risk is kind of moving out of the market right now with the euro aligned. North Korea is kind of in the background at the moment. No more airstrikes anywhere. So all of that geopolitical risk is fading away, as well as the political risk from the Eurozone is also taking a backseat. So yen will likely weaken as a result of that. Also, there is a difference in the monetary policy. With yen, Bank of Japan doesn't want yen to strengthen, so that supports this outlook on yen. So this is yen is weak. As a result, everything is likely to go higher. So 111.60 and then 112.24. Anything else that we would like to cover? Okay, if not, let's call it a wrap. That's it for today. I will see you again in the Skype chat room tomorrow morning.